we are looking at a tech sector market right now currently that's been under pressure for quite a bit. And the talk of sector rotation, has people very optimistic about the value stocks and the like. But people forget the growth stocks in the tech sector. The story's not over, nor will it ever be, especially if they're innovators, and especially if these stocks in particular, and these companies in particular, are in high demand. So people will go and portfolio managers will go and buy these stocks simply on the fact that they believe that these companies are going to go up and they're going to continue being innovators no matter what's going on in the market. They're under pressure. A lot of stocks have been sold off, and we've reached that oversold portion. So just for the near term. So I totally see it being in that oversold condition. People not only covering their the short sales, but at the same time going in and buying these tech stocks at a reasonable discount, in their opinion. Inflation is most certainly a concern. The Fed has called it transitory, though. All right, that the economy is opening up and that inflation is rising at a rate we have not seen in 10 years. Is that a concern? For the near term, absolutely. But what the Fed believes and what we believe here at Larrea Wealth is that we think that with the opening up of all the companies and everybody starting to go back to work, that this is a temporary move to the upside for inflation. Bonds are still on the low side. The yields are still on the low side and have been for a very long period of time. I just want to give you a quick example. Back in 1997, I remember this year in particular, the money market interest rates were above 6%, and right now we're below 1% in some areas. So let's take this and just put a pin on it. I don't believe that this is part of a longer term trend. More importantly, it is not such a broad measure of inflation at this particular point to be overtly concerned in your portfolios. Here's the thing. Consumption is going up. The consumer pricing has gone up as well. But we also have to put this into perspective. We haven't seen this in quite some time. And we had basically a frozen year, for lack of a better term. So the fact that the economic machine is starting to start itself up and running again, yeah, we're going to encounter, a liquidity. We're going to see consumption being driven up. We're going to see, and in turn, we're going to see prices, at your supermarket. Yeah, you're going to feel the pinch, but at the same time, we had not seen them going up in any particular order over the past few years. It all goes back to what is the rate that this is going to move up? Is it going to be so quick that the Fed is not going to be able to respond accordingly? And I doubt that that's going to happen at this particular point. What I think is that they have indicated in 2023 that they will make moves to the upside. So we have to keep in line and keep our trajectories as far as that is concerned. What happens from now until then? But to be sure, at this particular point, I think it's still, as far as the markets are concerned, it's still moving forward. There are still lots of opportunities to make money in this market. And I believe that growth is going to be the place you want to be deploying bulk of your strategic assets to at this point. We've seen the energies go up, and it doesn't happen too often, by the way, and it generally happens when the stock markets start going down. People are looking flight to quality, high dividend yields and the like, and utilities are the place to go to because it seems to be a safe harbor at that particular point. But what I foresee going forward is, if you're talking about the tech sector, you want to be diversified within the tech sector. You want to be in areas that are dominators, like computing, maybe not the peripheral sector, but the gaming area. We believe that there's a lot of growth there. We also cloud computing is going to become much bigger over the years. And that's going to be something that we're going to see hit new highs within the next 3 to 5 years. We also believe that as far as the whole sector as a whole, we think that is definitely have potential to go upside in double digits. So we're still very bullish on the sector. We do believe that value does have its place and will continue to make money for its investors, albeit not as much as the growth tech sector at this point. And that's why you got to be involved in quite a few markets and a few sectors as well.